September 30th, 2025, and I went into territory I usually avoid: earnings. If you've been with me for a while, you know I don't like these plays. They're volatile, unpredictable, and most traders blow up trying to guess them. But as a trader, you can't run from volatility forever. You have to learn to trade everything, even the setups that scare you. So I came up with a system. Instead of dropping thousands chasing expensive premiums, I bought what I call the lottery ticket strike. Today I grabbed 100 Nike contracts for 0.011 each. That's just $100 total risk. If I'm wrong, I lose $100. If I'm right, the upside is massive. That's asymmetric trading. Now, Nike had every reason to fall apart. Between tariffs on China, weaker demand overseas, and Beijing trying to cut back on US brands, sentiment was heavy. But at the same time, Nike was restructuring, cutting costs, and showing they weren't rolling over. That made me think Wall Street might be caught leaning the wrong way. Earnings hit, and Nike ripped the opposite direction of the fear. After hours, the stock jumped from $69.75 to $74, a solid $4 move. That's all I needed. When you're in a 0.01 contract, even a small move like that multiplies your money. My contracts instantly popped pleasant 50%, then dipped 12% as volatility shook out weak hands. But here's the part that matters. I know this setup, and I'm confident by tomorrow it'll be running higher than that 50% mark. That's why I stayed disciplined. This is how the math works. Contracts that cost a penny can quickly trade for 0.04, 0.05, even 0.10, depending on timing. That means I can realistically 4x, 5x, or 10x my $100 risk. That's the beauty of these plays: small risk, uncapped upside. You just need the direction right and the patience to let volume do its work. And that's the point. Volume never lies. Headlines spin, analysts debate, but the order flow tells the truth. On Nike, the bigger time frames showed buyers were ready, and they proved it in real time. That's why I trusted the play even when it pulled back. Most traders fail at earnings because they size too big. They want instant gratification. They want to be right every time. That's gambling. What I'm doing here is execution, controlling risk, letting volatility amplify the wins, and keeping emotions out of it. So yeah, today's Nike earnings play worked exactly as planned. $100 risk, contracts ripping 50% on day one, with potential to go much higher tomorrow. This is how you flip fear into opportunity. This is the Zero Emotion Trader. Like, share, and follow if this gave you